10-year note yields pulled back today after rallying north of 430 yesterday after stronger than expected CPI. We saw a pullback down to 426. That was only a modest pullback, and the market does remain above the key level of 420. Recall, 420 was the level that the 10-year Treasury yields couldn't get through since December, mid part of December. Now we're well above it and holding there for the next big event of news, which could be coming up later this week. But right now, yields remain elevated, despite the fact that we did see a pullback today at 426. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you will see that volatility rallied hard yesterday as yields went up. But today, as we moved away from those extremes, we saw volatility coming down. So as yields declined slightly, we did see volatility nudging lower. Wasn't a big move lower, and it still remains elevated from levels that we saw over the last several weeks. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means, yes, we get our in-the-moment look at the job market via the claims number. We also get the Empire manufacturing data, the NAHB housing data, but really the focus tomorrow is going to be on retail sales, and if that economy is continuing to grow. That's what the market wants to see for any kind of soft landing that the Fed has been talking about down the road. So a lot of data coming out, and then alongside of that, we will get a couple of Fed speakers. We get Fed Governor Waller during the day. Then later on in the evening, we will hear from Atlanta Fed President Bostic, who will be talking about the economy and policy. But again, that one won't be until after the market closes. So midweek, 10-year note yields backing off those highs from yesterday, closing today at 426, ahead of tomorrow's claims, Empire manufacturing, and retail sales.